The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Newsfeed Business. We begin with the Bangko Sentral ng Pilipinas, which kept policy rates steady at 5.75% in line with the inflation outlook. The Monetary Board explains this is due to upside pressures from the utilities sector, while rice remains a downside risk to inflation. The BSP anticipates continuing measured shift to less restrictive policy settings. The Philippine Central Bank now sees risk-adjusted inflation forecast at 3.5% within its 2 to 4% target range. The board's policy stance is a surprise for analysts who widely anticipated a 25% or 25 basis point rate cut. Last year, the BSP cut the policy rate by a total of 75 basis points. Wei Han-sun, Principal of Research and Consulting at APAC of TransUnion, tells the Bilyonaryo news channel a rate cut was expected to lead to an increased borrowing activity among Filipinos. Sun adds previous rate cuts resulted to a greater demand for credit due to its affordability. In the United States, consumer prices increased by the most in nearly 1 to 1.5 years in January, with Americans facing higher costs for a range of goods and services, reinforcing the Federal Reserve's message that it was in no rush to resume cutting interest rates amid growing uncertainty over the economy. The hotter-than-expected inflation reported by the Labor Department Wednesday was likely partly due to businesses raising prices at the start of the year, evident in a record surge in the cost of prescription medication and an increase in motor vehicle insurance. The report followed a pattern of CPI numbers overshooting expectations every January, which some economists said suggested that the seasonal adjustment factors, the model used by the government to strip out seasonal fluctuations from the data, were not fully accounting for the one-off turn-of-the-year price hikes. Analysts say the data reinforced expectations that the Federal Reserve will be in no rush to resume cutting interest rates, particularly as economic uncertainty is exacerbated by the expected inflationary impact of U.S. President Donald Trump's tariffs on key U.S. trade partners.
The real headline was the fact that the inflationary picture remains intact. The disinflation narrative that we are all hoping for to some degree seems to be continuing to hit some bumps in the road, for lack of a better way of putting it. Therefore, reflation continues to be a concern, and I think these numbers across the board solidify that. I think Trump is talking his game, so to speak, and he's going to do that. He will continue to do that. I think the Fed has continued to reiterate their autonomy, and they're doing a very good job at remaining above the fray and sticking to their game plan, which is managing through their dual mandates with regard to low inflation, stable prices, yet a robust economy with healthy employment.
Senators in Washington, D.C. cited threats from Russia and China as a case for the U.S. acquiring Greenland. Greenland, rich in untapped mineral resources, relies heavily on fishing and grants from Denmark for its economy. Debate on U.S. ownership of Greenland comes as it prepares for a general election to be held on March 11th. Leading issues in the election campaign include Greenland's aspirations to be independent and its relationship with Denmark and the United States. A recent opinion poll published last week also indicated 85% of Greenlanders are opposed, with nearly half saying they see Trump's interest as a threat.
Greenland has never been some remote island. It holds immense strategic and economic importance. Its location and proximity to critical transatlantic trade routes places it at the center of several global debates. The growing influence of China and Russia in the Arctic region, where Russia has long maintained military assets and China has invested heavily with a clear strategic eye, is a direct challenge to the United States and our allies. Greenland sits atop vast reserves of rare earth elements, materials critical for everything from technology to national defense. These elements are vital in the production of smartphones, military equipment, medical technologies, and much, much more. If the U.S. were to gain access to Greenland's resources, it could significantly reduce our dependence on foreign suppliers, particularly China.
So, Mr. Gray, if you were a Greenlander, would you rather have be part of America, a $27 trillion economy, or part of Denmark, that's a $407 billion economy, given the strategic imperative, the cost of investment, the ability to yield money from the international markets, the ability to defend yourself against Russia and China, where this is going to become a strategic imperative? Who would you rather be on the side of there?
It feels like we're saying they are an object that we can just take because we are the richest, most powerful country in the world. So I just want to push back here because there's so much that we can be doing without having to own Greenland. So much more scientific partnerships, so much more that we can offer when it comes to minerals and mining. We should just be pushing forward in that regardless of what happens with a potential referendum going forward.
And certainly that's why I find it troubling that while our ally is aggressively and actively seeking increased partnership with the United States, we have President Trump that insists on purchasing land that is, let's be very clear, it's not for sale. It's just simply not for sale. The president suggested that the United States needs to own Greenland to defend our national security is wrong. In fact, threatening our NATO allies really in this fashion undermines our shared mission to work together as allies to counter both Russia and Chinese footholds in the Arctic as well as around the world. Our strength as a country is economic, it's military, but it's also our friends and allies, which are incredibly important for national security.
In corporate news, Chevron will lay off 15 to 20% of its global workforce by the end of 2026. The U.S. oil company said on Wednesday it seeks to cut costs, simplify its business, and complete a major acquisition. At the end of 2023, Chevron employed 40,212 people across its operations. A layoff of 20% of total employees would be about 8,000 people. Those figures exclude another roughly 5,400 employees of Chevron service stations. Shares of Chevron declined 1.3% in afternoon trade. Sources tell Reuters the company told employees during an internal town hall that they can begin opting for buyouts now through April or May. Chevron has said it is targeting up to $3 billion in cost cuts through 2026 from leveraging technology, asset sales, and changing how and where work is performed. The number 2 U.S. oil producer has faced production challenges, including cost overruns and delays in a $53 billion Kazakhstan oil field project. Chevron also faces industry-wide weakness in the refining business and the expectation that oil prices could be under pressure over the next 2 years as global production growth outpaces demand. The boards of Nissan and Honda formally voted on Thursday to officially end talks to merge the Japanese automakers. A partnership would have created the world's 4th biggest auto group by vehicle sales after Toyota, Volkswagen, and Hyundai. Bloomberg reports, while plans for a single holding company are dead, they will continue a strategic partnership and collaborate on the in-house development of batteries, autonomous driving, software, and electric vehicle technology. Nissan share prices plunged 6.5% at the news. Honda shares dragged 1.25%. The pair, which are also due to report quarterly earnings, have seen their industry and the key China market upended by the rapid rise of Chinese electric vehicle makers such as BYD. And both are facing the prospect of tariffs in the United States, another major market. Meanwhile, Taiwan's Foxconn told Reuters it would consider taking a stake in Nissan in exchange for cooperation with majority stakeholder Renault. While Foxconn, the world's largest contract electronics manufacturer, best known for its role as an Apple supplier, also has ambitions in the EV sector as it seeks to diversify its business. Nissan, Japan's third largest automaker, backed out of the $60 billion merger talks with larger rival Honda after negotiations were complicated by growing differences, including Honda proposing that Nissan become a subsidiary, according to sources of Bloomberg. Nissan is pushing ahead with a restructuring plan announced in November that includes cutting 9,000 jobs and reducing global capacity by 20%. It has yet to disclose where locations will be affected. Asia-Pacific markets traded higher Thursday, breaking ranks with Wall Street that fell overnight as a stronger than expected U.S. inflation reading diminished prospects of policy easing by the U.S. Federal Reserve. Hong Kong's Hang Seng surged about 2.5%, Japan's Nikkei 1.5%, and the Philippines' PSI and South Korea's Kospi traded higher by about 1%. India's Nifty and Australia's main index also gained, with the ASX 200 hitting a record intraday high of 85.75, surpassing its previous peak of 85.66 on January 31st. The index, however, pared gains to trade flat. At the currency exchange, banknotes of Japan, China, Singapore, Korea, and the Philippines all traded lower. A suspected gas explosion at a department store in the central Taiwanese city of Taichung killed at least 5 people and injured 7 others on Thursday. The fire department said the blast occurred on the 12th floor of the building where construction was taking place. The food court on the 12th floor was closed at the time due to building work. Business and economy news from around the country in a moment. Newsfeed Business will be back. Stay with us on BNC. Welcome back to Newsfeed Business. As reported earlier, the Bangko Sentral ng Pilipinas kept policy rates unchanged. Let's get details from our correspondent, Sujin Kim, who joins us on the line. Sujin, go ahead.
Raine, in the first monetary policy meeting of the year, the Bangko Sentral ng Pilipinas decided to maintain its benchmark interest rate at 5.75%, unchanged since the last policy meeting in December, with overnight deposit and lending rates also unchanged at 5.25% and 6.25%. The Monetary Board noted that inflation forecasts remain largely in line with previous estimates. The risk-adjusted inflation forecast for 2025 was slightly raised at 3.5% from 3.4%, while the 2026 forecast remains at 3.7%. While BSP Governor Ellie says inflation risks have become broadly balanced, the utility sector presents upside pressures, while lower import tariffs on rice pose a downside risk. Deputy Governor Francisco Daquila Jr. says he sees inflation returning to the midpoint of its target range, aided by a decline in oil prices. Although there is a firm domestic growth prospects, the BSP flagged increasing uncertainty from global trade policies as a concern. Despite keeping rates steady, the BSP reaffirmed that it remains in an easing cycle, suggesting that rate cuts could come next in policy meeting. BSP Governor Ellie Remolona Jr. still thinks a total 50 basis point cut for the year is still on the table. The BSP hinted at a possible reduction in the reserve requirement ratio soon, possibly towards the middle of the year. And those are latest updates from Pasay City. Back to you, Raine.
Thank you so much for that report, Sujin Kim. The country sees its fastest credit growth since 2022. Bank lending surged 12.2% in December to 13.1 trillion pesos. This is higher than the 11.7 trillion recorded in the same period last year. The BSP credits this growth to sustained lending in wholesale and retail trade, vehicle repair, and electricity costs. The Maharlika Investment Corporation is eyeing to invest in the infrastructure sector with a foreign-listed firm. But MIC President and CEO Rafael Consing Jr. clarifies, while infrastructure is a target sector, the fund will not be involved in transportation projects. Over the weekend, the MIC announced a deal with a Thai firm to create a private equity fund aiming to raise up to $1 billion to modernize the agriculture sector. The sovereign wealth fund previously expressed interest in investing in energy, food security, healthcare, and mining. A shakeup in government as President Bongbong Marcos appoints economist Vince Dizon as the new transportation secretary. Executive Secretary Lucas Bersamin confirmed the appointment, which will take effect February 21st. Dizon replaces Jaime Bautista, who is said to have resigned due to health reasons. Bersamin says Dizon has been authorized by the Office of the President to begin the transition. Dizon previously served as president and CEO of the Basis Conversion and Development Authority and was a key official in the government's COVID-19 response. The Management Association of the Philippines is sounding the alarm on right-of-way disputes, slowing down the Metro Manila subway. Speaking on the Bilyonaryo news channel's Follow the Money, MAP Chairman Eduardo Yap says resolving this issue must be a priority, as the subway is a game changer for the country's business and investment landscape. The 488 billion peso Metro Manila subway project is set to be the country's first underground mass transit system, expected to ease congestion and spur economic activity. However, delays due to right-of-way issues, particularly in the Pasig area, are threatening its 2028 completion target. Yap urges government to grant the Department of Transportation full authority to resolve the disputes, warning that further setbacks could derail economic growth.
It's more a right-of-way problem wherein the rights of the landowner will be respected, and that the government may take hold of that property underneath. So it's a matter of negotiation, and that the government be vested with all the rights and the authority to do it.
Former Senator and boxing legend Manny Pacquiao wins another battle, this time against the Bureau of Internal Revenue. The appellate court upheld a Court of Tax Appeals ruling voiding the BIR's order for Pacquiao and his wife to pay 2.2 billion pesos in tax deficiencies from 2008 to 2009. The CA ruled the BIR failed to prove that all procedures were followed in its demand. The court said this is tantamount to depriving the Bilyonaryo couple their right to due process. Philippine shares closing in positive territory for the second straight day. That as the Bangko Sentral ng Pilipinas' decision to keep the monetary policy at 5.75%. The PSE index ended higher by more than 1% to close at 6113, finishing the day as the fourth best performer in Asia. All sectoral indices ended in the green, with mining and oil rising the most at almost 3%. Advancers outpaced decliners 116 to 86. Majority of the day's most active stocks ended in the green, with Jollibee Foods rising the most at nearly 11%. Meanwhile, at the foreign exchange market, peso is currently trading at 58.12, strengthening from the previous close of 58.19 to the US dollar after the central bank's policy meeting. And that's a wrap for today's Newsfeed Business. Thank you so much for making us your daily source of financial insights. I'm Raine Musñgi. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel. Follow the Money is next at 4:30. See you then.